Hello everyone, here's Mahsa from coinIX. coinIX is a blockchain investment firm based in Hamburg, and today I'm going to interview Chiel from Florence Finance. Hi Chiel, it's great to have you here.
Hey Mahsa, it's fantastic to be here. Thank you very much for hosting me.
Would you please introduce yourself and tell us how did you end up in the blockchain industry? What is your story?
Yeah, I will. So, Chiel Ruiter, 55 years of age already, so for blockchain perspectives, geriatric almost. I started my blockchain journey in 2017, 2018, when I helped a friend do the second only ICO in the Netherlands for a company called Okkel, which made small hardware devices. For me, that was a bit of a side project, just because I was interested in the space, and it got me kind of thinking about what are these tokens, what is Bitcoin, and, got me started down the rabbit hole. At that point in time, I wasn't wholly convinced. I was much more convinced about the idea of tokenizing shares than I was of actual Bitcoin and the whole monetary aspect of it. But that's what sparked it. For my sins, I was an investment banker. I did that for almost 15 years. I quit in 2015, after which I spent a lot of time doing a lot of restructuring business as an interim director for largely SMEs that had gotten themselves into some kind of financial trouble, either with the bank or with the tax authorities or otherwise. When COVID hit, all of that work basically dried up because everybody was on either government or on bank support. And so I was at home, with a little bit too much time on my hands. And that's when it really bit me. That's when I fell deep into the Bitcoin and crypto rabbit hole. One thing led to another. I felt I wanted to spend a lot more time in the space. I did some consulting work for the biggest exchange in the Netherlands, Bitfavo. And I ran into some very early founders, blockchain founders, the LTO network, which is a hybrid layer one blockchain, which listed on Binance in the 2017 cycle. And they had this idea that they wanted to have a kind of safe haven asset for, call it their crypto gains, because back then the only stable coin of any significance was Tether, and the FUD back then was as thick as it is now. And that didn't really seem like the place that you'd want to put all your money. And so the idea of building an alternative where we were at the helm ourselves, so we could control what and how those monies were being used for, felt like a good thing to be spending time on. So that was the general thesis. When we started building, we thought we'd build a euro-denominated MakerDAO type project. So a multi-collateralized stablecoin turned out to be a little bit too difficult. And so we ended up basically tokenizing private credit fund. And that is what is Florence Finance today. We started building at the height of the previous boom. We now have kind of 4 years of provenance. It is what it is. It does what it said on the tin.
Yeah, what I love about Florence Finance is that it's not just focused on the decentralized finance, and it's like a bridge that connects the traditional finance world and the decentralized finance world. And that's an advantage, that you have a lot of experience in the traditional finance and SMEs. Is there any specific moment in the past that you find this aha moments that, okay, this is what I want to do in my career, this is what I want to dedicate my time to? Like the first moment that you thought of the Florence Finance project?
So I spent the bulk of my career in traditional classic finance, mostly at Goldman Sachs, almost 10 years, and then the latter years at UBS and Credit Suisse here in the Netherlands, running their investment banking business, so the advisory part of the business, so not classical financing, much more M&A and IPOs and debt issuance and that kind of stuff. I loved that whilst I was doing it, but I was also starting to see the flip side of that coin. So there, where facilitating access to global capital markets is a good thing, the fact that the hurdle for that access is being increased is a bad thing. And the banks are part and parcel to that, and the investment banks for sure also. I could see that from the inside. It's very hard to argue against that movement, if you will, for the upping of that bar, because it is the logical conclusion or the logical consequence of fact that there is a higher and higher regulatory and capital burden to be profitable as a bank. And so you need to focus on bigger and bigger clients. So the whole thing is kind of self-fulfilling. I had cottoned on as a banker already that the only way there was ever going to be a change to that, it wouldn't come from the inside. It wouldn't be the banks, reaching back down to the SMEs. It would have to be grassroots. It would have to come from scratch from the outside. I already knew from the inside. That's why when I quit banking, I desperately wanted to do something that was real. I wanted to get my hands dirty. I wanted to be at the grassroots level as opposed to in an advisory capacity. And then when Florence crossed my path, it wasn't my idea. It was the idea of the fellow founders. It just struck me, here I can get my hands dirty. I can actually be, the executive. I can be the project lead. I can do some real world good by basically facilitating crypto liquidity to aid what is a societal problem, the SME's difficulties in getting access to finance and getting access to liquidity for, what it is they do. People don't realize this, but SMEs are tremendously important to society. They are, by number, 90% of all businesses in the world. They provide over 50% of all the jobs in the world. As much as the banks and the governments and even most people in their stock portfolio focus on the S&P 500 or even a smaller segment, the Mag 7, that's not where the action is when you think about it from a societal perspective. I think that gets lost on a lot of people. It certainly gets lost, on people when they look at their stock portfolio. It's something that we have to do something about, and that's what kind of Florence is. It ticked all my boxes because that's where I'd been spending so much time since COVID in the SME landscape, and I just realized this more than anybody else. So for me, it was a massive opportunity to kind of continue on that vein, and the fact that it was on blockchain and that sort of aligned with the other interests that I had was an added bonus. It wasn't the reason, if you will, to do this.
You've explained a bit about SMEs and what Florence Finance is doing, but if you want to go a little deeper into what exactly is the problem that Florence Finance is solving, what would be your answer?
Florence is a strange hybrid. Therein lies the beauty, but therein also lies, some of the issues, if you will. What we're trying to do is we're trying to bring excess liquidity we believe exists in certain parts of the cycle in the crypto sphere to the real economy. When we're doing that, the easiest thing to do, and that which is very in vogue at the moment, is just to buy treasuries, right? US treasuries, because they're very liquid, everybody accepts them as collateral, blah, blah, blah. Just makes life very easy. But, we argued at the beginning that really wouldn't help anybody because the treasury market is already very liquid. When we started building, also didn't work because yields were negative. So that would be a loss-making venture. That wasn't the reason for us to choose SMEs. We actually wanted to connect that crypto liquidity to a place in the real economy where you're doing some real world good. Through the cycle, we thought that would have a better yield profile. So we'd never run into this problem where we have negative yielding book, which obviously helps from a business perspective. But on top of that, we'd have this kind of, Robin Hood argument that we're doing some real world good, which you sort of needed because remember when we started building, we were competing with the BlockFis and the Celsius of the world that were paying 8, 10, 12% interest. And it was a little bit unclear how they were generating that interest. And obviously with the benefit of hindsight, it's pretty clear that they weren't. It was hard to see how you could make that work. So what we decided, and it was a very honest decision, is look, we're not going to compete on yield. We're going to compete on merit, right? Can we show transparently where the money comes from? Is it honest? Are people going to take a liking to that? And then notwithstanding the fact that it may in percentage terms be a little bit lower than what all these other people are offering, and that's even before we get into the 20% that Terra was offering, right? There will be a place for that, but it will be a different cohort that wants to invest in that. It won't be the opportunists. It will be those in crypto that believe that crypto should be used to actually do some real world good. At the time, anybody with an idea could get funded. It may have proven a little bit naive with the benefit of hindsight, but certainly that was the thinking at the outset. I think we're proven right with respect to some of these other sources of yields being unsustainable. Where the jury is still out is whether or not there is this cohort of, call it do-gooders in the crypto ecosystem that, really wants to fund what is Florence at scale. Because even though we've been at it for 4 years and we've successfully proven that it can be done, the scaling has been the more difficult part of the equation.
Yeah, I really love the Robin Hood analogy. That was interesting. So it's basically like a bridge between cryptocurrency lenders and real-world borrowers, and you can literally tokenize real-world assets as well as collateral and bring them on chain, and that's something which is really needed in the industry. Is there any recent partnerships or any updates, any advancements from your project that you want to share with us?
This year has been all about building the community. So for that, we needed a liquid token. So we did our token generation event in January, just before Bitcoin ETF announcement. So that was fantastic timing. Got a lot of people interested in our project. We had a whole kind of points and NFT thing around that, predated some of the points meta that you see at the moment, which has gotten quite toxic, which at the time, was really fun and a lot of people engaged with that. Ever since then, we have continued to build. we have managed to get our first centralized exchange listing. Over the next couple of months, I think the big game is going to be how to get more users into our protocol. And that has been hard to date. So when we started building on Ethereum, there was a very obvious gas fee issue that we knew we would have to address at some point, but we weren't sure whether gas fees would matter because it would only be for kind of ETH whales that would do in big size. And then the whole gas fee thing is a bit of a moot point, or whether we really would be pushed towards more of the retail end of the spectrum when the gas fee does become important. Over time, we learned that we want it to be usable for retail. So we moved to a lower gas fee environment on Arbitrum late last year. That worked. But what is clear is that there's not that many people in these layer 2 environments, and I don't think Arbitrum is special or different in that regard, that are really interested in these, call it safe savings products. I think we need a different type of person. And the hope is that within the much larger Coinbase, call it investor base, people that have Coinbase accounts, there will be more of those people. Coinbase will be the easiest way to access centralized exchange, call it liquidity. The thinking right now is that we should move to Base. So we've moved the token to Base. We haven't moved the protocol to Base yet. And if and when that happens and the whole Base summer kicks off and people really start to get into these Web3 wallets, Coinbase is now offering as a kind of one-click option to their customers, then more people that have historically only known crypto from a swipe left, swipe right on their centralized exchange account will be able to, move their activities on chain and engage with, protocols like ours, which only exist on chain. And I think therein lies one of the things that we underestimated. I think of all the people that own and know crypto, there is only a very small percentage that is actually active on chain. Most people have some Bitcoin or some Ethereum in a wallet or, some meme coins, but actually doing stuff on chain is a very small cohort. And that small cohort is not necessarily interested in very safe savings products. That's a matter of time. We think we'll get there. That's the roadmap for the next 6 months, is to make those things happen and then to see whether or not the adoption will be at a higher level than it was, either on Ethereum or on Arbitrum to date, because that's what's going to drive growth going forward.
I think there are some other platforms like Maphole, which are focused on lending markets. Can you name some of the other competitors? What exactly makes your project different from them?
There's a lot of lending protocols and they each have their own, call it niche. If you were to categorize them, there are two big categories. So one is tokenizing things that are already securitized. So if you're tokenizing treasuries, or if you're tokenizing shares that are already listed, or if you're tokenizing some debt fund that is already listing, so kind of what BlackRock is doing, then tokenization is just a layer of utility on that which is already distributable and liquid in traditional markets, which may or may not have value, but that's more of an institutional product offering. As that institutional market grows, that will likely be much bigger than the part that we are focused on. I think where we are, which is the next category, is I like to call them real world assets. So not securities, because they're kind of, that's not the real world. Those are already 1 degree removed from what's happening on the planet Earth. In these real world assets, there's a whole bunch of people that are experimenting with tokenizing things that are real, that are tangible, and that lack either distribution or secondary market liquidity. And so it's happening with strangest things like ammunition, with music rights, with land rights, real estate. But real estate, I'd say, is more towards the kind of more institutional side of the spectrum. And then in our case, private credit. There are a lot of people trying different stuff in different parts of the world. I don't see them as competition. I see them as innovators trying to solve the same problem. And we need lots of them. Just like there are a gazillion banks in the world, we need a gazillion people trying to break open the access to credit with blockchain rails tools. We can do that in a very transparent and open and fair way. And ours is one of many of those projects. Projects that I like are projects that try to do some real world good. So one of the more obvious examples is somebody like Goldfinch, which is very similar to what we are doing, just focused on emerging markets and more microcredit type thing, which is another area that is starved for credit and would be massively aided if they could get more access to credit. And to the extent that we can use blockchain rails and blockchain technology to facilitate that, one has to believe that that's a good thing. And similarly with SMEs, I think it's very much much the same thing. People don't realize that SMEs are so starved, even in Western democracies. But it's true, the numbers are there for all to see. I write a blog, I publish these things on a regular basis. If people are interested, go to our website, read some of what I write. It's actually quite amazing that this persists in this day and age, even in Western Europe and the US.
I really liked your sentence that you said you don't call them competitors and you call them innovators. For sure, if two projects work together, push each other forward, we will get closer to mass adoption. And the market is so huge that there's space for everyone.
Yeah, people are starting to notice that, right? So you're starting to get these aggregators for our part of the spectrum that are basically taking all these, real world assets, because by definition, we're all relatively small to those, tokenizing treasuries, right? Because that's such a massive market. The amount of people that are willing and able to put money into that kind of thing is so much bigger because, everybody knows and trusts treasuries. But, private credit is much more difficult, and it takes time to kind of win people's trust and to earn the right to be a real project. And there's a lot of that, and there's some great initiatives in that regard. And we kind of get together, we do all kinds of Ask Me Anything, podcast stuff. I'd encourage people to listen into some people like RWA and Polytrade, and RWA.xyz is a great platform that kind of summarizes a whole bunch of projects that are all trying to do the same thing and all the metrics and stuff like that. So there's a lot available, and there's plenty happening in the space.
Is there anything else that you would love to share about Florence Finance?
I would love for people to come and join us on our platform. So have a look in our Discord, join us on Twitter. We have a vibrant community. Have a look at, our track record, providing yields. Yields are between 7 and 10%. To date, we've had no credit mishaps. Fingers crossed we can keep that up. But, it is SME lending, so people are taking real credit risk. But yeah, come join us. We think that if we can get enough people to join this kind of grassroots efforts, then we can make a real world impact using these blockchain technologies. And that's what it's all about.
You can find all the links related to Florence Finance down there in the description. Just visit their platform and follow them on all the social media to get more information about them. For the last question, I want to talk about the people who are not in the blockchain industry yet. There are some people who have heard about it and they probably think that it has potential, but they are a little cautious. They're scared, or they don't trust the protocol so much to get in. What is your message to these people?
That's actually a really good question. And it's one that I've written a lot about in our blog. So I have a controversial take that we're going to shift the narrative from crypto being mainly about speculation to crypto being about actual use. And there where speculation played a real role, I don't look down on it as a use case in building adoption and in getting people in. I think we're getting to the end of that. It won't ever go away, and I think the whole meme coin craze at the moment is testimony to that. But I think we can't grow much beyond where we are based on speculation alone. So the next wave of adoption is going to have to be built on the back of actual use cases. One of the most obvious use cases is dollar stablecoins. If you had instant access to digital dollars, if you were living in Turkey or in Venezuela or, in any one of these autocratic regimes, that would be so much preferable to, that which is. It wouldn't even be funny. So obviously there's a whole bunch of people that are trying to prevent this from happening. But it is crystal clear to me that when that shifts, when that Overton window shifts and people start to realize that this is a real option, this tech is real, these companies are not going to, take my money, that is going to drive so much adoption. You won't even begin to comprehend. And people don't have to believe in Bitcoin or believe in Ethereum and, the 21 million cap and all that stuff. They can just, instead of hoarding paper dollars and putting these dirty things under their mattress because they can't take them to their local bank, they can just on their phone have the same thing and have it be acceptable as legal, well, maybe not legal tender, but at least as barter currency between each other, because it's better than whatever is legal tender in those countries. So I think this is an accident waiting to happen. There's a million reasons why, there's a lot of resistance against that, but I think it's inevitable. If you think about what we're doing in the Western world, the value of that, so a digital dollar, is probably the lowest in the world because, we have well-functioning banking systems, we have well-functioning payment systems, all that kind of stuff. But in the global south, the value of that as a use case is so immense. I don't think there's any way to stop that. In a weird way, it is the US shooting themselves in the foot at every corner, at every turn, that has prevented the large-scale adoption. But now that seems to have turned, I think that is going to be absolutely massive. Like it was in my case, crypto is a thing that once you get it, once you see how much better, how much easier it is, there's no way back, right? So as soon as you realize that you can send any amount of money to anybody in the world without having to ask any questions, without any limits or whatever, why would you still keep money in a bank? I mean, I don't anymore. I get so angry when I want to make, a couple of $1,000 transaction to, whatever I did, which is a regular occasion. And nowadays, anything over $5,000 and I have to fill in forms and I have to do this, that, and the other. I mean, it's just completely insane. People are just going to opt out, and I live in a civilized Western world where all of this stuff is meant to be fluid and work well, whereas we're actually going the other way with all this KYC and AML compliance overreach. Even here, there is benefit, but and in the global south, it's just that is going to happen. That is going to drive adoption like nobody realizes. And once you have an app on your phone that allows you to do things that your bank won't, or you never even had a bank account because you couldn't get one, in both cases, you're never going back to the alternative. That is going to be the moment at which it gets to mainstream. And I think that happens this cycle. And when that happens, it's going to be very interesting whether or not that which we have built is up to that test. Because I think that is the really interesting question, right? Is all the work, the hard work that we've done in the crypto land, gotten the infrastructure ready so that we can actually accept and process all of this that I think is coming. And it's going to be a really interesting time. But yeah, that to me is a foregone conclusion. So I'm very, very bullish about the space.
Blockchain technology and decentralized finance move towards inclusion, and they bring a lot of advantages for unbanked people in the global south. So we're really looking forward to all the milestones that Florence Finance is going to achieve in the future. We really believe in your projects, and that's why we have invested in your project. And
we appreciate that.
You're welcome. And thank you for doing this interview with me, and I wish you a very great day.
Thank you very much, Mahsa. Pleasure.